Let's do some more covered call stuff. Hey everybody, this is Pookies of Red. We're back with another 5-year, $500 Rags to Riches series episode. It is Monday morning, short week. We got Good Friday this Friday, so it's a 4-day week, 4 days, which is good for us, right? Because days that are where the market's closed, theta still works for us, so it's pretty cool that we get to take advantage of that. And let's kick it over. All right, so we're looking at the 50K account. And you can see here that two contracts that I want to focus on exclusively. So Friday, okay, I bought 2,800 shares of plug. I sold 3. I had 300 before, so I bought another 2,500. So 2,800 here. I sold 25 more contracts this morning. My original 3 were sold at 12 cents each. I sold this one at 13. It was shortly after market open. I didn't want to wait for a fill in case the price started to push up, which you can see it kind of started to do. So I didn't want to wait and get filled at a lower price on the larger portion of the shares because I still wanted to collect that premium in case I got assigned. So blah, blah, blah. Long story short, I got a good fill. But it did go up to like 17 cents, which would have been nice, but I'm not going to sacrifice that extra $4 times 25, so $100 over potentially just not getting filled. So 13 was a good compromise, decided to sell those. So now I have 28 contracts open against 2,800 shares, obviously, at 13 cents each. So I collect this premium no matter what. I'll calculate the difference here. So let's just go ahead and punch in some numbers here. So if I get assigned, right, if this just goes up over 350 or the contracts expire worthless on Thursday, that is going to be 13 cents or $13 because it's times 100 times 28. Okay, so $364 in premium. Okay, and then also 2,800 times the difference between 350 and 3.387. So let me 350 minus 3.387 times 2,800. Okay, so that's another $316. Add that. So my net profit on this, if I get assigned, is $680.40 for a week's worth of waiting, or 4 days. All right, but that $13 times 28, I get that no matter what, and I'm probably not going to get assigned because this isn't over 350, and I don't think it's going to be there by Thursday. So we'll just wait and see. But either way, I get that 360 or whatever this week, and then I'll just keep opening short contracts and just keep rolling that process because it's a $2,800 investment, right? Let's do some more math here. 13 times 28 is $364 divided by so 364, and then we got to divide 2,800, or I'm sorry, we got to multiply out 2,800 times 3.387, which is 94.83. So divide that by 364. 364 divided by 94.83 times 100. It's a 3.83% profit. Not that great, but it's a 4-day hold. So it's pretty good compounded. And we're going to be compounding these pretty actively over a short period of time. So speaking of which, let's kick down to the next contract here. So SPCE. Okay, let me just turn this on, turn this off, and then I'll kick this up to the 4-hour just for fun. All right, so here's SPCE, and you can see that I sold these contracts at $6, and now they're currently worth $3, and they expire Thursday. So if I want to make a little bit extra profit, what I can do is I can close these out right here, okay? Just one contract. I can close this out, and then I can open up this one here, 11 days, for that same $6. So I will, in essence, be collecting $9. So I'm taking the $6 initial profit potential that I had on the contracts, sorry, and I'm rolling it out and adding another $6 or $7 to that contract. So let me do that really quick so you guys can see how it works. So what I'm going to do here is I'm going to right click on the position. Let me just do this fresh, okay, just so you guys can see it all. So here's my cover option position, okay? This is the sum of the shares and contracts. This is just the shares. This is the contract. So I'm going to right click on the contracts only, and I'm going to put my mouse over this closed position -1 SPCE, make sure it's the contract, okay? And then I'm going to go to close by limit order, okay? And then I'm immediately going to cancel that. So if you click on that one, it automatically submits an order for you at whatever the last, the bid or the ask price is, okay? So I don't want to do that, but I did want to show you guys that just so you can kind of see how it works. So what I can do here instead, all right, if I want to do a little more control and make sure that I get filled specifically at $3, right click this. I can click create new order. and then change it to single option. Okay, so if you're not sure how I did that, you go to, it'll start off on cover option here. You click this, go up to single option, click single option right there, and it should just show you the contract. Okay, now I got to change the quantity to 1 because that's what I got filled at. And you can see down here the mid price. The bid is 2, mid is 2, ask is 3. So I'll try to get filled at 2, but I doubt that's going to happen. And since I sold this contract, I need to buy it back to close it. So I'm going to pocket the difference there. So if I click place order here, we can give it some time, see if it gets filled. I doubt it will. So I'm just going to kick this up to 3 just so I can get it done for the recording. And you can see the contract itself goes away. Okay, so what I've done is I've realized, well, $1.70 minus the fee, I realized $3 in profit, and then I gave a good chunk of that right back. So what I'm going to do now is I'm going to go to the 11-day out contract, because that was the 3-day right here, the March 28th. That was this one right here that I just closed for 3. Now I'm going to go to the 11-day, and I'm going to sell 1, because I only have 100 shares. Now I keep those shares because I closed just the contract. I keep the shares, so I can open another covered call right now. And bid is 5, mid is 6, ask is 6. So I'm going to sell 1 contract, make sure the date and all that, strike price, all that good stuff matches. I'm going to sell this for 6. And then we just wait for it to get filled. Now I could bump it down to 5 or whatever if I wanted to, but I think I'm okay with just leaving it at 6. So we'll see if that gets filled. Other than that, so once that does get filled, by the way, it's going to open another cover option position, and it'll look just like this, but with plug. Or I'm sorry, SPCE. Okay, so we just got to wait for the price to pop back up a little bit. It'll get filled at 6 as long as there's volume on the contracts, which there was decent volume considering what it is. 413 volume, 417 open interest, so we got a little bit of fill potential there. If I don't get filled, that's okay too. Now that will increase my $6 profit potential up to the $3 I collected, $3, sorry, that I realized, plus the new $6, so $9. So I'm increasing the profit potential by 50% just by rolling that or legging out and then buying a new, or opening another cover option position on that same 100 shares. Okay, so I've reduced my cost basis here. So I bought these at $141 per share. I've lowered it to 138 by that first covered call, and then once this gets filled, that'll go down to 132. So I'm just lowering my cost basis over and over and over again by selling covered calls against the same shares until I get assigned. WBA, it popped and dropped, right? This one has a lot of wicks, a lot of volatility in it, which is great. It's about 40% profitable right now, so I don't want to exercise, or I don't want to buy this one back to close it just yet. I'd like to see it around 80% profit. So once we get there, I'll do the same thing. I'll just close it out, and then I'll open a new one. Now, most of these contracts expire on Thursday, which is pretty good because that means probably Thursday morning or afternoon, I can just buy them back cheaper because they'll probably be in profit potential there. And then I can just buy new ones going into Friday, Saturday, Sunday. And that's 3 days worth of theta that I get no matter what, that the market can't trade. Like it can't be open on Thursday, or Friday or Saturday or Sunday. So I just keep getting that theta's value deducted from the value of the contracts over the weekend. So whether or not it's represented by the broker is a different story, but that's just how theta works. And plug, we just kind of went over that one. I opened up the 3 contracts, and you can see they're already up, 18% because the stock hasn't really moved. So these shorter expirations are pretty nice. The premiums are smaller, remember, but they add up much more efficiently because we're doing more of them in the same amount of time as we would if we collected a larger premium for a longer expiration. So I don't mind putting in a little extra work, but we'll see how it goes. Now, NEO, this one popped up to 509 at market open, which is still, if you look at this bigger time frame here, the 4-hour, we're still kind of in a downslope here. So if I kick it up to the daily, we're forming lower lows here, which is good for us, right? Because we want that mild bearish. You can see the calls. I sold these at $30, and I sold 84 of them. They're only worth $18 right now. And the buyers of those contracts are probably losing their brains because they're, 40% down or whatever. So we don't have to worry about that because we're on the other side of it. So when the price sells off or goes sideways or doesn't go up fast enough to exceed that, we get the profitable scenario. So it's pretty awesome. And then if we look at OCGN, this one popped up pretty significantly overnight. And if I switch over to this other portfolio, you guys can see something cool. This is why I decided to just close my position on Friday and open up plug. If we look at OCGN here, we're still not that profitable. So remember, the net profit on this one was going to be $29, and we're still not there. We're still not at $29 profit, despite the fact that this has gone up to $2.08 since we bought the shares and sold the calls. So, the price, when it goes up fast, it makes it less profitable than if you were still just assigned. So this can get assigned right now, and I will sell these shares at $1, and I'll still make more money than if I just tried to close this manually and sell it. So it's pretty interesting how that works. That's why I don't really worry too much about getting assigned, because when it's assignment time, I end up making more profit in most cases. Now there is a brief window where the shares may accelerate, and then the contracts have to catch up. So that might be open for about a couple minutes. If you can get filled in that sweet spot or you exceed that profit cap, that's great. Otherwise, most of the time, you're just either going to get assigned. Like this is more than twice the strike price. So I might get assigned. But most of the buyers of these calls, they're just passing them back and forth, trying to speculate on that premium. Eventually, the contracts will deflate. And then I'll be able to, that threshold of assignment gets lower and lower, which I'll probably get assigned. But if it doesn't, the calls just expire worthless, and then I make money by opening up another round of covered calls, or I could sell the shares and still exceed that profit cap. So if price goes up and for some reason I don't get assigned and the contracts expire worthless, I keep my shares anyway, and then I can just sell the shares at market price for an even greater profit than that $29 limit. So it's pretty easy to just not do anything in these scenarios, because you can do all these crazy calculations. You can burn yourself out going through all the math, or you can just trust the process. And like this is up $121 on this position, still just 100 shares, and it still isn't $29 profitable. So I'm okay with that. Right? So I don't have to worry about trying to figure out like where I should sell or calculate targets and stuff. It's cool. It's good to know that stuff, but ultimately that's not what's going to make or break these trades. This is supposed to be passive. So you don't just want to be fixated on this stuff. This is just kind of dividends on steroids. Okay. So once you kind of learn that and kind of let off the gas a little bit, take a breath, this whole process gets a lot easier. So let me just keep an eye out here on SPCE. I'm just going to click modify. I'm not going to actually modify it. I just want to see where the bid and ask are on this, and I don't feel like clicking over here to look at the actual contract. So it looks like it's still 5 and 6. So I'm going to just leave that where it is. I will end this episode right here, though, because we're 12 minutes in, 12 and a half minutes. So I just wanted to kind of run you guys through the Monday morning covered call scenario here and explain why. I closed out the OCGN position Friday. It blasted up today, and I don't feel bad, right? I still made faster profits. Plus, I got to open a new position and plug and get a better premium than I did on Friday for selling the other 3 contracts. So it's okay, right? We don't have to stress out. So that's all. I just wanted to share that. I'll see you guys next time. Thank you all for watching, and let's be safe this week.